Okay, we will give folks a few minutes to filter in. I can tell already we have a very global audience, which is incredible. Seeing many time zones here. And very, very excited for today, but as much as I want to reveal more, we will wait until we have a couple more folks filtering in and then we will get started. Let's give it one more minute and then we shall get started. So one more minute here. Okay, well, thank you all for tuning in today to another edition of a doula community masterclass. This is a weekly series where we chat with experts in respective fields who know things that obviously I don't know things that obviously we don't know, but are experts in things which we believe and we've heard directly from you that you want to know. And today we're chatting with a very special guest for what I would say is probably the single most requested topic and the most popular question we get, which comes to taxes. And I'm sure Angie gets these questions all day, but she's the expert here. We're chatting with Angie Ortega, the CEO of Nubis Accounting and Tax. I will actually pause here, and Angie, let me hand it over to you. If you could do a brief intro on who you are, we'll dive right into the presentation. But before we do, just so everyone here is aware, we have some awesome questions which we crowdsourced from folks before the event, and Angie has a phenomenal presentation put together, which is going to walk through the most common questions that are asked across the board when it comes to taxes, entity formation, and more. We do have a little special surprise at the end. Angie has a extremely generous offer, an extremely generous reward for folks who do stick with us to the end. Just mentioning that now, so keep that in mind towards the end of the presentation. I'll let Angie do the reveal there, but without further ado, Angie, thank you so much for coming on. If you could do a quick intro on you, on your company, we'll dive right into the presentation.
Awesome. Well, thank you, Arjun. It's an honor to be here among all the entrepreneurs joining us today. My name is Angie Ortega. I'm the CEO accountant. I cater to foreign entrepreneurs. I am the owner of Nubis Accounting and Tax Firm, in which we cater mostly to our foreign entrepreneurs, non-US residents, expats that are looking to start a business here in the US. And most of them are either in the digital or e-commerce business. So thank you for having me today.
Thank you for coming on. I was joking before to Angie that obviously we have questions from customers globally and from people globally, but this is content which even I find incredibly confusing and I'm looking to learn more about. So I will personally be also paying close attention and really excited to learn here. Without further ado, let's jump in. I'm going to be hopping through some of the slides, but Angie is the start of the show here. As a message to everyone, please feel free to chime in with questions live as we're going through. We do have time dedicated at the end for Q&A though. So I just want to flag that to everyone. If you ask a question and it's not answered immediately, we will get to it at the end, or we will try to, depending on how many questions are asked there.
Yeah.
Angie, I'll pass it over to you. Let's dive right in with entity structure.
Awesome. Well, let's talk about the most common topic. I think we can start from the beginning, right? Where it's what are the entity structures? What is it that we have? So the number one question I get, well, Andrew, what are the different types of entities? Let's dive in. So we have what we call an LLC. These are single members, foreign owned. There is partnerships, meaning that they can have an LLC and they have multi-owners. By default, it becomes a partnership. We have an S Corp. An S Corp entity is mostly meant for US citizens and residents. Non-residents are not eligible for it. And then, of course, we have a C corporation, a corporate structure, which is considered where non-residents can actually utilize. Now, when it comes to businesses such as drop shipping, e-commerce, the most common one that most of clients use is the LLC. The LLC is actually the most diverse structure and the most simplest structure when it comes to corporations. And for our non-residents, it's actually one of the number ones that it's being used because of some of the tax benefits around it. Now, a lot of people ask me, well, what is the difference between the LLC and the corporate structure? Well, an LLC is a flow-through entity or a pass-through entity. What that means that it's diverse back to the person at a personal level. So you will file taxes at a personal level. The IRS does not consider an LLC as a corporate structure for tax purposes. Versus a corporation, it is an actual corporation where you have to meet all the guidelines of a corporate structure, meaning that you have to have, some examples, right? The tax return is US based. You pay corporate taxes. Right now, a C Corp as it is at a 21% flat rate. It might go up depending on the new tax laws that are coming into place. So it's not set in stone quite yet, but it is something that is on the works. Versus an LLC, depending on what you have, if you are a US resident, you actually pay your taxes at a personal level. So you will file the company taxes under your personal tax return. And with non-residents, it's a little tricky. With non-residents, it depends. Some of them have to file a 1040-NR, which is for non-resident tax returns, and you have to pay a US income tax. And for some, don't have to file the 1040-NR, and they have to file the 5472 and 1120, which is more of a informational tax return, to keep it in simple terms, right? So it will dive into the complexities of things, but in overall, that is the different types of structures. Now, one thing that I definitely do want to emphasize is on partnerships. Partnerships is a little bit more complex. So once you form a partnership or you have more than 2 members, by default, it becomes a partnership tax return. And what that means is that you have to file a US income tax under a 1065. And then each partner has to file their own personal tax under either a 1040 or 1040-NR. For non-residents, if you form a partnership, by default, you have to pay US income tax. And if you are a non-resident, you have a what we call withholding requirement. And right now it's at a 37%, and that has to be paid out to the IRS on a quarterly basis. That's why I don't recommend it as much, because it does limit cash flow. But there are some that do like that structure, and they pay their income taxes here unless they apply for a tax treaty. And we'll get to that in the previous slides. So for entity structure, that's pretty much the whole small picture to it on
Awesome.
The grander scale, right?
Yeah, well, I can even just tell from right here, and folks listening, there's a lot of complexity here. And I appreciate one thing Angie said, which is really trying to explain this in layman's terms, or terms which are easy to understand. And I think the other thing, I'm sure folks, I know I have several follow-up questions about some of the tax things you were mentioning, but I know we will be coming to that later. So to recap here, different entity types: single member LLCs, multiple members, which are partnerships, an S Corp, which is required for US, or you have to be a US resident, and then you have your corporate structure. And it does sound like, I know it's tough to really say in all cases this is what you do, but it does sound like, and Angie, tell me if I'm generalizing correctly here, for non-US residents who are setting up, a digital business, drop shipping, e-commerce, it tends to be that an LLC single member is the most flexible structure there.
It is. It really is. But it also comes down to the country that they are from. So I look at different things, right? The country that they're from and what is their current tax structure in their home country. Because depending on that, there could be the possibility where corporate or C Corp is actually better than the LLC. But that comes case by case basis. So like I would say, not all fits the same shoes, right? So not everyone is the same. So we have to look at it at a basis by basis case. But yes, the majority, I can say that go for the LLC.
Awesome. Well, let's jump to the next topic here. US sales tax versus income tax.
Yes.
This is a very hot topic. Angie, I'll let you dive right in here. I'm very curious what the answers are here as well.
All right, awesome. Well, there's definitely a huge separation between the two. Okay. US sales tax, in simple terms, is governed at the state level. And it's governed by the sales. So what it means essentially, if you sell tangible product, so if you are in the e-commerce world and you sell, whether it's digital, downloadable digital product, or if it's a tangible product, let's say you sell a cup or t-shirts, whatever it is, then you have to pay sales tax. Now, sales tax is a little bit more complex because it is, like I said, it's governed by the states, and they are governed by Nexus. And what I mean by Nexus is that they go either by the physical presence nexus, which means that you have a warehouse within that state, or that is the home state that you registered your company, and you have product within that state. That means that you have created a nexus, and therefore you have to register, collect and remit taxes. And then the other one is you don't have any product there, but you are selling within that state and you have met their economic threshold, which in most cases it's about 100,000 in sales or 200 transactions within that state. Then that means that you have met their economic nexus. Now you have to collect and remit taxes to that particular state. The beauty about sales tax is that the owner of the store does not have to pay that out of pocket. Essentially, it's your client paying for the sales tax, and you're just becoming the middleman. You're becoming that withholding company, you can say, for the state. So whenever you collect that money once a month, you have to remit that to the state that it corresponds to. So that's pretty much the overall picture on sales tax. Now, income tax is actual taxes that you have to pay on earned income, whether if it's at the federal or state level. So depending on the state that you do register your company in, some states don't have US income tax, and some states do. So if you register in a state like, for example, Florida, Wyoming, Texas, I believe Nevada, if I recall correctly, they don't have state income tax, which therefore it's one less thing to worry about, and all you have to worry about is at the federal level. So that is the differences between the two.
Okay, well, I'm going to ask a couple things you did touch on and define, but I know that people ask these specific questions or ask for definitions here. So I think it'd be great just to recap on a couple. The first is, can you define again what it means to have a nexus, or this term economic nexus?
Yeah. So nexus means two things. You have a physical location where you hold your product. So, and this is in terms of US sales tax. So let's just say there's a warehouse, or let's give an example, Amazon FBA, right? So Amazon FBA, most people take their product, they take it to a certain warehouse, and then Amazon distributes it depending on where they sell, right? So what that means essentially, let's say they put some product in Texas, some product in Florida, some product in Wyoming, then you have already created a nexus within those states, right? And essentially you have to register with that particular state that you have nexus. You have to then collect and remit taxes to that particular state. Economic nexus means that you don't hold any product within that state, but you are selling to that state and you meet their economic nexus. Now, each state has a different rule on that. There are some states that it starts at 50,000 in sales. Majority of them are about 100,000 in sales, with the exception of California and New York. Those are about 500,000 in sales within that state. So once you meet that threshold, then you have met their nexus of that state.
I see. If I understand there,
Connection.
gotcha. If I understand there, is it fair to say, I know you mentioned a different threshold in those states, but it sounds like for the states, unless you are above $100,000 in revenue, it's not something which has to be on your immediate radar. Is that accurate?
That's right. That's right. And it's only within that state, not your overall income, right? So it's only if you sell within that state. So like I said, it's always good. E-commerce is very versatile, right? And e-commerce can grow very, very quickly. I have a lot of people that are in the e-commerce and cater to certain states because they want to start trying them out or trying out the market. And then I have some that literally go with all the states and they just have to keep a good accounting system. And of course, there's a lot of tools out there that you can actually utilize to keep it all in place. So just to kind of give you guys a little hint here. So TaxJar and Avalara are the two main softwares that people use for sales tax management. And so those are great tools to have when you are starting in the e-commerce and you're starting to sell, and there's, they keep you kind of updated to let you know, hey, you have met their threshold. If you want to keep it more on the lower cost, then obviously adding into your bookkeeping and just keeping a report on a monthly basis, then you get to know where your sales are coming from and if you're getting close to meeting their nexus or not, right? So there's just, different platforms and how to do that.
Very helpful. So the first tool was TaxJar. How do you spell the second tool?
Avalara, Avalera.
Okay, TaxJar and Avalara. So two tools there. I was about to ask that, but two great tools there to help you and your company manage or keep track of your potential sales tax liability or what you might be on the hook for there.
Yeah, exactly. Another thing that I definitely get asked quite often is regards to reseller certificates. Reseller certificates. So let me kind of give you guys an overview of what that is. It has different names, but everybody almost knows it by a reseller certificate. But what it essentially is, if you are in the e-commerce world and you are going to sell tangible product, and you are looking to buy product from a US vendor, they will ask for a reseller certificate. It's mandatory. Otherwise, they won't be able to sell you on a wholesale. And if they do sell you on wholesale, you actually have to prepay your sales tax out of pocket and then you collect it back once you sell that to your clientele, right? But a reseller certificate, what that means is that you are buying product from a US vendor at a wholesale, and it avoids you paying the sales tax to that vendor since you are reselling the product. Hopefully that makes sense.
Okay, so maybe an example might be helpful here. You're an Amazon seller, or you're looking to Amazon FBA, and you are, let's say you're based in India. It's a single member LLC based in India, and you'd like to form a Wyoming single member LLC. In that specific example there, does that person need a reseller certificate? And then using that as an example, at what point might they have to consider, hey, I have to pay a sales tax and then US income tax?
Got it. So in this particular scenario, sales tax. So sales tax in Wyoming by default is already required because Wyoming does have sales tax. So that'll be your first home state, right? Since that is where you registered your LLC, you will have to register for sales tax within that state. Now, sales tax, it's only paid if you sell product within that state. And you don't pay that out of pocket. Your client pays that. So you actually have to put that in your back office. So you collect that money. Once you collect it, then you remit that to the state. Now, a resale certificate means that you are buying product from a U.S. Wholesaler, and that U.S. wholesaler will require a reseller certificate in order for you to buy that product. And then, of course, not having to pay the sales tax to that U.S. vendor. And then income tax, it depends. For Indian citizens that have an e-commerce business here in the U.S., does have to pay their U.S. income tax here in the U.S., but there is a tax treaty benefit around that, which they pay lower tax fees here. And then, of course, they have a tax treaty that they can use and get a foreign credit in their home country because they already prepaid their taxes down here, right?
Got it.
Yeah.
Okay, awesome. One other definition I want to just double in on here, which you have defined, but I think it's a very commonly asked question. How would you, in explain like on 5 terms or in very basic terms, define effectively connected income? And is there an easy way someone can sort of filter or run through and say, hey, here's how I can think if I have effectively connected income?
Effective connective income, EIC. So actually, that's a little bit more of the complexity of EIC, and I actually have that in the next slide.
Okay, let's jump ahead then.
Yes, we're jumping ahead. All right. So this is, well, that's more for non-residents. So let's talk about U.S. residents, and then we'll jump into the next one. Sounds
Perfect.
great. All right.
Perfect.
Awesome.
Let's do it.
All right. Okay. So let's talk about U.S. resident specific questions that I normally get when it comes to U.S. income tax and what you have to file. So for U.S. residents, it's a little bit easier and not as complex because we're used to taxes, right? We're used to our taxes. We're used to paying this on a yearly basis. But it gets a little bit complicated when you're new to business, right? And understanding what are some of the requirements when you're starting a business. And I think that's just for everyone. But for U.S. residents, if you have a single member LLC, like I already mentioned, you pay your taxes at the personal level. Okay. And the deadline, if it doesn't change by the IRS, is normally due by April 15th. And our tax season starts right around mid to end of January. If they have a multi-member LLC, they will file a 1065. They will get a K1, which is the distributions between the shareholders. And then they have to file that under their personal tax return. And then, of course, if they have an S Corp is a little bit more specific because they have to put themselves on payroll. So one of the rules under an S Corp is they have to put themselves on payroll and pay themselves a reasonable compensation according to what their role is, what the type of business it is. And then, of course, it gets distributed into their personal tax. So they will also get a W-2 and a K-1 whenever they file the 1120S, which is also due by March 15th. Same deadline with partnerships. So that's why non-residents are not eligible for the S Corp because they have to put themselves on payroll. And legally, if you're a non-resident, you can't work here in the US, right? So that's why it's not allowed. And let's see, and then the states. So I get a lot of questions like, well, I live in the US, but I form a company in Wyoming. Wyoming doesn't have state income tax. And a lot of people think, well, if I form it there, I don't have to pay state taxes. That is wrong. It is completely wrong. Doesn't matter. Well, let me backtrack that a little bit. Okay, so let's take it step by step. So if you form an LLC in Wyoming, but let's just say you live in Georgia, You still have to file taxes under the personal tax, right? Which is your 1040. You still have to file a Georgia state income tax because that is your home state. That is where you reside. That's where you live. And if Georgia finds out that you have an LLC registered in a different state and it's going through your personal, they're going to ask you to register within the state of Georgia. Okay. So then you're going to have two entities doing the same thing, but now you have to register in your home state. So might as well register from the get-go in your home state, because legally that is what you have to do. The only exception to that is when you own a corporation, an Inc. When you own an Inc., whether it's an S Corp and not an LLC, treat it as an S Corp, an Inc., an actual corporation, whether it's treated as an S Corp or C Corp, can be registered in any state. And obviously you will pay your corporate taxes according to wherever you registered, which in this case, let's say Wyoming, right? Wyoming doesn't have state income tax, so that's why it's commonly used. So if you form a corporation in Wyoming, you don't have to pay state income tax. You do have to pay federal income tax, and then you will get the distribution. So if you're an S Corp, you'll get your W-2 K-1. If you're a C Corp, if you pay yourself under a salary, you'll get that W-2. If it's a dividend withdrawal, then you will get a DIV, right? And then you file that under your personal tax return. But a lot of people don't recommend a C Corp because for US citizens, there's that double taxation. You have to pay income taxes at the corporate level, and then you have to pay same income tax at the personal level, right? That's why a lot of people don't like it. Versus an S Corp avoids that double taxation.
Got it. Two quick clarifying questions here. If you are a US resident, what is your recommendation then for what state you should form your LLC in?
In your home state.
Home state. And what does home state mean?
The state that you reside in, where you're based out of, where you have your driver's license, where you have your home.
Gotcha. Well, no, I think I know you explained that, but I think it's very important to clarify because the example you brought up is maybe one that on paper seems like something you can do. Wyoming doesn't have state income tax. I live in California. I'll just form the LLC there. Does not work. The recommendation is form the LLC in your home state, which is the state you physically live in, have your driver's license in, etc.
Yeah, exactly.
Okay.
Just to avoid any other complications, because in certain states, specifically California, it's very, California is one of the stricter states when it comes to things like that, and they will penalize you for forming in a different state, and then they will ask you to form it in your home state and pay that franchise tax. And mostly the residents in California don't want to pay the franchise tax, which is about $800. So yeah, there's no avoiding that.
One follow-up question here, and if you're going to touch on this later, we can punt till then.
Yeah.
Let's say you do live in Delaware and you form a Delaware LLC. Mm-hmm. At what point might you have to do what's called a foreign LLC filing and file in another state? Let's say New York. And maybe if you could define what a foreign LLC filing is. And for example, maybe you start selling in New York, you open up a physical office there. How should people think about this term and when they might have to do it?
Yeah. So a foreign LLC means that you are forming a subsidiary to another state. It's the same company structure because the EIN does not change, right? But it means that you have to now form, like you said, New York, because you opened up you have a physical presence Nexus, which means that you have a brick and mortar type of store, right? Or you actually have an office down there that you are operating business. And in some cases, if you employ or have employees within a particular state, then they will ask you to form a foreign company there, right? That's what that really means. It's most of the time if you have created a physical presence Nexus, or if you are going to employ people within that state.
Got it. Okay. So to recap there, is a way maybe to think about it. if I'm located physically in a state for my LLC there, the second either myself or my business opens up a physical presence in other states, that's when I have to consider this foreign LLC filing.
That's right. That's right.
Okay. We have a question coming in about that scenario for non-US residents, but I guess we can tackle that next when we run through the non-US resident slide. Perfect. And one more question here on something you touched. How do you recommend the decision to form a Delaware C Corp versus a Wyoming C Corp? What are some of the reasons why someone might choose either state as a US resident?
Versus the other one? It comes down, most of it, if honestly, there's not much of a difference, to be honest, because a corporate structure has to meet the same guidelines, right? Regardless of the state that they form in. And mostly for US residents, there's no particular reason why you should do it one versus the other than in Delaware, there is a corporate income tax that you do have to file, and franchise tax is higher. Versus Wyoming, there is no corporate tax and franchise tax is very low, right? It's probably less than $100. So that might be some of the considerations. And then when it comes to investors, maybe a lot of people tend to go with Delaware because it's more recognized as a state for investors versus Wyoming, right? But that's mostly more for the non-residents than US residents, that you could take that into consideration. But it doesn't really make a difference for US residents.
Got it. Well, I think that's a really good nuance point there, where if you're just looking for a corporate structure, then it sounds like there's, the corporate structure is very similar, if not the same, and there's different franchise taxes or an annual fee you pay. But for investors, certain investors, or if you're a non-US resident versus US, the Delaware C Corp might be required or highly recommended / preferred.
Exactly.
Great. One question here, actually, on the best state to form your US LLC in. If you are a multi-member LLC with one resident in the US and one resident outside the US, what is the best state to form your LLC in?
It will be under whoever the US resident is in. So if you do have a US partner and they have a pretty significant, let's say it's a 50-50, then it will be preferred to form within that state of their home residency. Now, if the non-resident has a higher percentage of ownership, then I would recommend Wyoming.
Okay. So depending on the ownership split, if the non-resident has a higher split, Wyoming. If it's a significant split for the US resident or even more, then the home state of the US resident.
Yeah.
Great. Awesome. And I guess the last point here, you touched on it a little, but to dive in a little, what financial statements are required for folks who are forming these US entities as a US resident?
Yes. This is a great question. And this actually goes for both US and non-US residents. Financial statements, the profit and loss and balance sheet are really important, really, really important. And with my US residents, one thing that I do commonly see, which is a major, major mistake, and mostly if you're owning a business, is that they wait until the end of or let's just say whenever we are in tax season, to go with their accountant, and they literally just give them a box of receipts, or they don't even give them anything, and they expect for the accountant or the tax preparer to do their taxes for a company. So let's just say for an LLC, what I see commonly, and mostly for a certain demographic. So I don't know, I'm Latina. So in my Hispanic community, we see this a lot where they go to a certain tax preparer and all they say, well, just fill out this questionnaire and so what is the amount that you think that you spent on, let's just say advertising or, bank fees or, whatever expenses. And that is not the proper way. And the reason why is because if you were to get audited by the IRS, which right now they're cracking down, it's like no joke. You want to have proof of every single expense, right? So having a proper accounting in place is the way to do it. Having a proper system to either scan your receipts of your business expenses, or have it somewhere where you can probably take a picture, upload it in a folder. Then that's the best way to keep track of all of your receipts of your business, right? So with an LLC, a lot of people try to be very lenient. A lot of accountants, they're like, oh, just fill this form out. And they really don't care, because honestly, as a tax preparer, you're signing off a waiver. You're letting the accountant know, I'm filling this out. This is what I think I earned. This is what I think my expenses were. And you're signing off like, I'm writing this down for you, right? So if you were to get audited, the accountant is on, it's clear, and you have to now present yourself to the IRS and then show that you actually had this income and expenses. And if you don't, then there's where you potentially have high penalty fees. You have to pay back the IRS for any taxes owed. They can assess you. I mean, there's a lot to it. And if it's a certain amount, if it's more than 100,000 that you owe in taxes, then the IRS will actually confiscate your US passport, and then garnish your wages or freeze even your bank account, right? So there's a lot of major consequences towards that. So for you as residents, if they have an LLC, just, it's not really hard to get QuickBooks Online or Xero. We use Xero as our accounting software. And if you don't know how to do your own books, then hire someone that can do them for you, right? I think it's a necessary asset to have. It's not, I don't consider an expense, because as a business owner, you want to know what your numbers are regardless, right? And to know your numbers, you need to have proper accounting on a consistent basis, on a monthly basis, preferably. And I'll touch more into that because of the importance of it. But for you as residents, if they have an S Corp or partnership or even a C Corp, you have to submit financial statements with your tax return. So you have to have a proper P&L, you have to have a proper balance sheet to submit that with your tax return. Versus with an LLC, you don't really have to submit them. You just kind of plug it in and call it a day, right? But I always say, I personally don't take cases if you don't have a financial statement, unless you want us to do your own bookkeeping, right? And one thing that I do want to touch on that is that I commonly see, and mostly with you as residents, is that they commingle. They commingle personal expenses with business expenses under their business business checking account. Don't do that. The reason why is because first, you lose your limited liability protection under that LLC. So if you were to get sued, now whoever sues you can actually go against your personal assets, because you use that business checking account like your personal account, right? And also you won't be able to allocate all the personal expenses as a business expense. So just definitely keep that one in mind.
Wow. Well, I think there's a ton of valuable info here. Two things which really jump out from the last few minutes here. One, either track yourself, like just keep track of your expenses. It could be a spreadsheet, it could be a folder, just track them somewhere, or pay someone or hire someone, whether it's a professional or software, who can help you. But don't sort of push that under the rug, because it will come back in the future at some point. And then the second thing is, I think this is good advice from the get-go: separate personal and business. Do not blend the two. That also can make your life and your company's life a lot more painful and confusing.
Yes, definitely.
Okay. Great. Well, let's do this. I know we touched a bunch on, or we started to touch on some of these questions for non-US residents, but for specific things here, Angie, I know we have a couple columns. If we could sort of touch on these similar questions from a non-US resident perspective, that would be fantastic.
Mm-hmm. Yeah. All right. One of the top questions I get is, why should a US resident or a non-US resident form an LLC? For non-US residents, it depends on the type of company that they want to form and the type of business, right? So most of the time what I get is that, hey, Angie, I want to sell my product. I want to get a PayPal or a Stripe account, but I can't because they're asking either for an EIN, social security number, or ITIN. And I don't have any of that. So, but they are not really selling in the US market. They just want to get the merchant accounts in order to sell to their demographics. So at that point, we either recommend a foreign-owned LLC so that they can get the EIN, they can obtain an ITIN, and then therefore they will be able to obtain the PayPal and Stripe accounts or merchant accounts, right? And then of course a bank account as well. Then for US residents, it just comes down that they want to separate, a business and from personal. So that's the number one reason I get from non-residents.
Awesome. So to recap there, for non-US residents, a big reason is the ability to access this US payment infrastructure, whether it's Stripe or PayPal, and the US entity allows you to get the EIN and the bank account and an ITIN if needed, which then allows you to use these processing or payment processing systems to then sell. Awesome. And then US residents, but I think this applies for US and non-US, separating personal and business. I think that's an important thing to stress again. That's always a good thing any business owner can and should do.
Exactly. And for US residents, what I get commonly is that they want to establish a brand or a name for themselves under a company structure. So that's why I normally get that. But anyways, here, once you start a business, you want to form a company if you're a US resident, right? So that's kind of like by default.
Right.
Now, a lot of the questions I get asked, well, where should I form? Which we kind of touched base on this quite a lot. And honestly, for me, after doing kind of an investigation of the different states, their state rules and regulations, and honestly, Wyoming is the number one. Mostly for non-residents. Wyoming is the top notch because there's no state income tax. It's easy to get a resale certificate if needed. And there's a privacy infrastructure within the state of Wyoming as well. So
okay, Wyoming is the recommendation there. So again, Wyoming, and to clarify here, because I think this is important, it's as a non-US resident, you can choose any state, and Wyoming has many, many benefits. As a US resident, though, as a reminder, the best state is your home state, physically located with the ID.
Exactly.
Right.
All right. So let's talk about tax filings. Tax filings for single member LLCs, and then we'll touch for multi-member LLCs. I believe I already mentioned this, but for non-residents, I look at different things. I look at, are you selling into the US market? Or what type of business that you're doing, right? So these are the common questions that I ask. If you're selling in the US market, are you going to have a physical presence here? Are you going to have an office? Are you going to have a warehouse? Are you going to hire employees? Are you going to hire contractors within the US borders? Are your customers US based? All of these questions, and also what home country are you from, right? Why? Because in certain countries, there are tax treaties. So the IRS has established tax treaties with certain countries. And depending on that tax treaty, and if you're part of that tax treaty, then we look at these different scenarios. Why? Because you have the benefit that there's no double taxation. That's why the tax treaties are in place. There's no double taxation on the same income that you will be earning, right? And of course, mostly if you're selling in the US market. So you did ask a question, well, what is the nexus, right? What is considered the nexus if you sell within the US? So, and mostly if you have a warehouse, right? So I want to touch something that the IRS did have. Give me one sec. Let me pull it up right here really quick. Where did it go?
And while we're pulling this up, we have some awesome questions coming in the live chat. So we'll definitely get to these at the end in Q&A. So please keep the questions coming.
Yes. So for non-users, while I'm looking at it, I have the link, but so while we're looking at it, so for non-US residents, we look at those factors. Why? Because we have to then determine if they have to file a 1040 NR. A 1040 NR means that they will file a US income tax as a non-resident, and then possibly even pay an income tax here in the US. Now, if they form part of the tax treaty and they are selling into the US market to US residents and they have a tax treaty, we add the tax treaty benefits so that they don't have to pay the US income tax here, and then pay that in their home country, right? So this is why it's so important to really understand your business concept, because there's a lot of misinformation about the Nexus. If I don't have a warehouse, if I don't have a physical presence Nexus, if I'm a foreigner, if I'm a foreign owned LLC, I don't have to pay income tax. It's not true. It's mostly comes down to what country are you from? Is there a tax treaty? Are you selling in the US market? Even if you don't have any physical presence Nexus, but if you're selling in the US market, by default, you have a Nexus with the US, right? And then therefore you have a 1040 NR compliance along with the 5472 and 1120. So it's a little bit more complex, right? And then of course, if you have a tax treaty benefit, then we add the tax treaty benefit to that 1040 NR. And I definitely want to give you guys the actual IRS report that states this so that there's no confusion. And it's, hey, this is from the IRS directly,
Yep.
Okay? So let me get that link and then I'll put it here in the chat so that you guys can definitely have that. So where is it?
And while Angie's pulling that up, I think that's an important thing to highlight, which is a lot of these rules, Angie doesn't make them up. People don't make them up to, make people's lives difficult. These are US policies. It's determined by the IRS, and folks like Angie and really a lot of what we're trying to do here is help educate people on here's what is required in your specific circumstances. But yeah, you can always, and this goes for anything, you can go directly to the quote unquote source and you can look at state documents or even IRS documents, and those are readily available online.
Yes. So I'm just going to read this really quick. So according to what the IRS says, so generally when a foreign person engages in a trade or business in the United States, all income from sources within the United States connected with the conduct of the trade or business considered to be effective connected income, which is EIC. This applies whether or not there is any connection between the income and the trade or business being carried into the United States during the tax year. Now, if we look more closely to what they say, and mostly when it comes to, well, I'm selling in the e-commerce, I only, have Amazon FBA. It's technically not my warehouse; it's the Amazon's warehouse. Well, let's see what's considered for in regards to this for the IRS. So you are considered to be engaged in a trade or business in the United States if you are temporarily present. So that's one. So if you're not an immigrant, right? If you have effective connective income with a U.S. business trade within the United States. So that also could mean if you live in the U.S., but you're under a visa status and you engage in, or you're an employee of a business, right? And it also says if you are a member of a partnership that at any time during the tax year. So if you do form a partnership tax or an LLC and there's dual, more than 2 members, by default you become a partnership. By default, you now have a connection with the US and you have to pay taxes. If you have gains and losses from sales, exchange, US real property, that means if you're under the real estate, then of course you have that, you have an EIC to that. So these are just some of the comments, what is considered an EIC connection. And want to touch base on the, let's see, hold on, where is it? let's see. Let me see if I can grab this link really quick
Awesome. Thank you.
and then send it to you guys.
And if there are other links which Angie has, or even after this recording, the webinar, we're happy to share them out via our social. So yeah, or even if there's notes here, etc. All of this will be shared out after. So we'll be putting that out from the company Twitter and other accounts too, so you can access those links there too.
Yeah, exactly. Arjun, actually, I'm gonna email to you because I forgot I'm using my phone for this.
Okay, let's do that. So this link here specifically, we're happy to put this out on our company Twitter after. Awesome. So I guess maybe final question here on this content is tax filing for multiple member LLCs.
Well, let me touch one more base regarding the foreign owned LLCs. So that is one part of income tax, right? The other part where you really don't have to pay, where you don't have to file a 1040 NR, if you form an LLC as a foreign owned LLC, meaning that you won't engage in any type of US business and your customer base are not US, you won't sell any product to the US market, you won't have any physical presence nexus, you won't have employees or contractors within the US, you only need it for to obtain merchant accounts, then at that point, you only file a 5472-1120. If you don't meet that, then you will be required to file a 1040 NR, right? And then we have to look into the tax treaty benefits or not, or otherwise you pay taxes here.
I think that's an incredibly important point. I know you just said it, but could you say one more time, what are the criteria for non-US foreign-owned single-member LLCs where they only have to file this informational Form 5472 filing?
Yeah. So the only time that someone only files the 5472 and 1120 is a 1120 pro forma. So don't get it confused up by people think it's a corporate tax return. It is, but they only require the first part because they need your signature, right? But all it is if you don't engage in any US business, and what that means is that you're not selling into the US market, you don't have an e-commerce store within the US, you don't have a physical presence nexus, meaning a warehouse, a brick and mortar, or an office space, a physical effort, not a virtual address, an office space, right? So there's a difference between the two. And then of course, you don't have any employees or contractors within the US. You only need it to obtain a PayPal or merchant account, and you're selling outside of the US, then you only file the 5472-1120. And of course, with the 5472-1120, one of the requirements is your financial statements. So you do need a proper P&L and balance sheet to submit that with the tax return. And I want to emphasize something in regards to the 5472. This form is no joke. It seems very simple when you actually look at the form, but it's no joke. That particular form, out of all the forms the IRS has, is the number one that has the highest penalty fee. If you don't file this form on time, there is a potential for you getting penalized $25,000 and up, depending on how many members there is. Well, if it's a single member, it only should be one, right? It's a really highly penalized form. So I highly, highly emphasize, please keep in mind that if you form an LLC and you are sole owner, whether you have to file 1040 NR or not, all of the foreign owners have to file the 5472. And it's very important to file it on time, or at least file an extension, and then you'll have an extra time to file it, right? But I highly, highly suggest keep that in mind. It's a very high penalty fee. And if you do miss it once, if you're late once, they will waive it one time in a lifetime.
Wow.
So yes.
Okay, well, no, thank you for highlighting that. I think obviously that's an incredible amount of money, but as with many things here, if you're well prepared from the beginning and you're keeping track of your expenses and separating personal from business, and you're aware of some of these deadlines and forms that need to be filed, these are all avoidable things. So I think that's an important lesson to stress here too.
Exactly. So if you formed your company this year in 2021, remember that tax season here in the US starts mid-January. up until April 15th. And that's for our single member LLCs. That's your deadline, right? April 15th. But my deadline, if you file with me, it's April 1st.
Yeah, I'm sure, because you must be busy. To recap there, we actually had a question which came in to maybe just clarify, what are the due dates to file taxes for an LLC and a C Corp for this upcoming tax season?
April 15th.
April 15th. But yeah, as Angie said, the due date should probably be earlier, so you're on top of it. And if you're looking for help for these forms with someone like Angie or someone else, or even if you're doing it on your own, get it done earlier. Don't leave it to the last second. Exactly.
Great. And definitely consult with an accountant that it's experienced with non-residents, and that has a really good throughout knowledge, because not a lot of accountants cater to non-residents because of the complexity of it, right?
Yep.
And of course, let's touch base on multi-member LLCs.
Sure.
So multi-member LLCs have a different deadline. That they have a deadline of March 15th to file the, at this point will be a corporate tax return, which is a 1065, right? So you do have until that deadline. If you have non-residents, remember that you do have to file the 8804, 8805, which is the estimated tax payments that you have made towards the partnership for those foreign members. Okay. And the deadline to make the final payment will be January 15th. So keep that definitely in mind to make that estimated tax payment. So that's definitely one. And then once you file your partnership, you will still also have until April 15th to file your personal tax, right? So there's two steps to that one. So you have a partnership tax, March 15th, and then personal tax by April 15th.
Okay, awesome. So again, as a recap, there's a lot of dates here, a lot of information being explained. We're happy to do a recap after. You'll have the recording, so no need to take super detailed notes here. As we are approaching the top of the half hour, Angie, I think we actually just want to jump ahead to some of the FAQs, and then we can come back in. So if that's cool here, I'm just going to jump ahead here. So we do have some Q&A here. The first question here is, if you are selling outside the USA, so let's say you're a non-US resident and you're not selling to the US, you're just selling outside the USA, what taxes do you need to file? And we'll say it's a single member LLC as well to make things simple here.
So if you have a single member LLC and you are a non-resident and you're not selling in the US market, then the only requirement will be the 54721120 at the federal level. If you filed your company, let's say Wyoming, where there's no state income tax, then you don't have to worry about state income tax. The only thing that you have to worry about is your annual registration with Secretary of State to maintain your LLC active. And then of course your deadline at that point will be April 15th.
Awesome. So to recap there, you're selling outside the US, you have this form 5472/1120 filing at the federal level. And then on the state level, you have your annual compliance or the Secretary of State fee or filing, which has to be done to keep the LLC compliant.
Active, exactly. And of course, if you have a registered agent, then that's an additional fee that you have to keep in mind. Now, for US citizens owning an LLC and you sell abroad, unfortunately, we pay worldwide income regardless of who you sell to. So yeah, you'll pay regular taxes like any US citizen for the income earned outside of the US.
Okay, well, that's good to know there. Another question coming in here. Let's say you've opened an LLC in another state. Is it possible to move an LLC to Wyoming or move it to another state?
That's more of a legal question. So I won't be able to answer that one, unfortunately, because I'm not an attorney. So that would be a great question for a business attorney at that point. Okay. But for tax purposes, I mean, you can have LLCs in any state, but if you can move it, I don't know.
Okay, maybe the question here, or it's a question I have, is let's say you are a non-US resident and you formed an LLC in Delaware and you decide, hey, I actually want a Wyoming LLC for some of the benefits you've mentioned. Is that something you can do, or do you end up just doing this foreign filing and now you're sort of paying for two states in terms of the annual report, the compliance, etc.?
You have to it has to make sense if you want to move it, right? Because you can always register within another state and close the other one. Because why have two if it's not mandatory, right? If and mostly if there's no physical presence nexus, economic nexus, then why have two? If you want to definitely do it because of the tax benefits, I would just say, well, open it up in the other state and close it off in the other one, because there's no need to have two, as your main company.
Awesome. That's a really good point there, where maybe the best solution, but this is where you should consult, speak with a legal advisor. I appreciate the caveat there that maybe you should shut down the LLC and set up a new one, but it sounds like that is determined on really a case-by-case basis there.
Yeah, it is. It really is.
Great. Another question coming in here. We often see, and maybe you do too, LLCs that are formed with another entity, maybe a foreign corporation or a foreign entity as the member of the LLC. Yeah. In that case, does the foreign entity file taxes, or how does one file taxes in that case?
Yeah, the foreign entity does file taxes. So it's a little tricky on this one because obviously they're not a person, right? In this case, if it's a foreign company owning that LLC, you still have the 5472 requirement, right? And if there is a nexus with the US and you have to file an income tax, then you have to file an 1120F, which is for foreign corporations having US business and then having a nexus within the US. So it's a little bit more complex. So you have to keep that in mind, that 1120F, it's really a complex tax return. But it is doable. I mean, either you have just a 5472 if you don't have any EIC within the US. And if you do have an EIC, then you have an 1120F, which is also due by April 15th.
Okay, got it. And I think this touches on another question here, which is, can a foreign owned LLC be owned by another entity, or does it have to be owned by an individual?
No, it can be owned by a different entity. Yeah.
Great.
It definitely can. It can be owned by a corporation here in the US, by a foreign entity as well. So there's no limit to that one.
Got it. And I think that gets back at the what you were saying earlier on the flexibility of an LLC, where an individual could be the owner, a foreign entity, a US entity, etc.
That's right.
Another great question here. We have a bunch of questions coming. This is awesome. Please keep them coming. And if we do run out of time, already I can tell this is a really hot topic. Maybe we do another event, or we can do a Q&A after on social media. But this is great. Keep the questions coming in.
Awesome.
If you have a physical address with a registered landline number under your LLC, does that count as a nexus even if you're not at the address? And the context here is that some banks might require a physical address, or they might require a US address to apply for the bank account.
In that case, I highly suggest to get a virtual address. There's plenty of virtual addresses out there that you can use as part of your company. So that probably will be the first thing you want to get before you form your company, is a virtual address. And then with that virtual address, you register your LLC. And then, of course, it makes the process more simplified when you are looking to open up your US bank account. So I would suggest to get a virtual address. And no, that does not constitute on having a physical presence nexus unless you actually get someone's home address, or someone, an actual house or an actual office building where you will have to have a landline and you have to have a US then at that point, yes, you're creating yourself a nexus there. So I always say get a virtual address. That's different. Yeah. So a virtual address is my recommendation to get it before even registering for the company.
Okay. Well, I know we're actually over time here. There's a bunch of great questions. How about this? We'll finish with one more question that I think Angie wants to. Angie, I'll pass it over to you. I know you had a little surprise in store for folks who are with us to the end, but maybe final question here. How should someone think about whether or not they need an ITIN, and how can they get one too?
That is an awesome question, and I get this a lot. So an ITIN is a kind of like a substitution of a social security number. Okay. So if you're a U.S. citizen resident with a social, you don't have to worry about the ITIN. This is only for non-residents, or for people that live in the U.S. and don't have a legal status, or are not eligible for an SSN. So an ITIN is definitely needed if you want to get a merchant account, it's going to be needed. To file your taxes is going to be needed. If you want to open up a US bank account, most of the time is going to be needed, whether it's for the business or if you want to open up a personal one, they're going to require it. So is it required all the time? 100% yes. So I would say, but if you form a company, you can actually obtain it in different ways, right? With an ITIN. So if you do form a company, an LLC, you can actually obtain your ITIN through the corporate structure. The second way that a lot of people do obtain the ITIN is with their tax return. So they actually have to file a tax return, paper file the actual tax return with the ITIN application, and then at that point submit it to the IRS. The only thing that you do have to keep in mind is that I highly suggest to work with a CAA, that's a certified agent. Why? Because they can actually certify your passport or ID as an original copy, and then certify all the documentation submitted to the IRS, and it's almost 100% sure that you will get approved. Versus someone, if an accountant, like even myself, you do it with me, we actually need a physical passport and submit it with the original documents to the IRS. And a lot of people don't like that because you can lose it along the way.
Yep.
So that's the difference.
Awesome. Awesome. And one maybe thing I'd add there is, as Angie mentioned, an ITIN is required for many things, especially things based in the US. However, I will flag that there are new banks popping up, which actually don't always require an ITIN. So that's exciting to see. But I think, as Angie said, there still are many banks and many tools, software services, et cetera, which do. So this is, again, probably something where, depending on your exact use case, you should consult or, research with the exact provider onto whether or not you need it. Okay.
Yeah, but the number one
go ahead.
is
Sorry,
taxes.
Go ahead. Number one is taxes. You can't get around that.
Yeah, number one is taxes.
Great. Okay, well, look, we have a ton of great questions here. We're over time, so here's what we're going to do. I'm personally going to see if we can do another event. There's some awesome questions here. We'll see. For some of these questions, though, I'm going to pass it over to Angie. There actually might be a great way where you can get these answered.
Awesome. Okay. Well, I know for a lot of you guys stayed all the way to the end, and I definitely want to offer you guys a free consultation. I normally charge $150 per 30 minutes of my time. So if you do want to get a whole hour, it's $300. So as a one-time and as gratitude for being here with you guys and staying throughout this whole presentation. I know Texas can sometimes be boring, but I think this is quite exciting, and mostly when it's something new, right? So I definitely want to offer a free consultation directly with me, and I can definitely answer a lot of your questions, because a lot of these cases are case by case, and not everyone is the same, right? So if you want the link, Arjun, I'll provide that to you so that if they are ready to book, then they can use that link and book a call with me.
Sure. So let's do this. In terms of how to redeem, Angie's going to send me a link here. Angie can shoot me a link. For everyone on the call right now, if you want to you can probably just shoot an email we could shoot an email to us, and then we'll pass along the link. Or Angie, would you prefer if they reached out directly to you? What's easiest there?
Doesn't really matter, to be honest with you. I think it would be better if they send you an email, because then like that will know, hey, they were actually there at the conference, sure. And like that you can pass along the link. Mm-hmm.
Awesome. So let's do this. If everyone here could shoot an email too, I'm going to type the email in right here. If you're on the call, and let's do this. I know hopefully everyone's on their computers or on their phone, but as Angie said, first of all, this is an incredible offer here. Angie's time is incredibly valuable. Yeah. As you can see, there's a ton of nuance here around each case. So Angie, thank you so much for even this offer. I mean, in terms of the value of your time and obviously the value of these calls. So everyone here, I'm shooting in an email here. If within the next, let's say, I know folks might be out or on their phone, within the next 30 minutes, everyone who emails, I put the hello at email here. I'll get a link from Angie and send a message in. Just say you were in the webinar and we'll send the link over and you can schedule some time to chat with Angie.
Awesome.
Cool. Okay. Thank you so much, everyone. Angie, again, I was telling Angie, I learned a ton from these calls, but just based on the questions here, and I think how many people are here still at the end, which is incredible, because as you said, taxes are not the most exciting topic, but people need to know the answers. I'm definitely going to follow up after to see if we can maybe do a follow-up event, but thank you so much for coming on. It was a pleasure.
Thank you guys for having me. It's such an honor and pleasure to me in this, and hopefully, yes, let's definitely schedule something for next time.
Awesome. Okay, well, good morning, good night, everyone. I know we're all across the globe, but thank you so much for tuning in. And as always, we'll be back next week with another masterclass too.
Bye, everyone.